You ever stare at a trading chart and just feel like you're trying to see the future? Well, we're about to break down how professional traders really read those same charts. And I promise you, it is not what you think.
First things first, we've got to talk about the biggest lie in trading. It's this idea that almost every new trader gets taught. And honestly, it's the #1 reason why so many people end up losing money.
So let's just get right into it. What if all that pressure you feel, the pressure to predict what's going to happen next, to be right every single time, what if it's all completely wrong? I know that might be frustrating to hear, but getting this one idea is probably the single biggest leap you can make towards thinking like a pro.
And this right here is the trap. It's this idea that you need to be some kind of fortune teller with a crystal ball that tells you if the price is going up or down. That mindset just turns trading into a super stressful guessing game, and that is just not a recipe for success.
This slide, this contrast is the whole game, right here. Beginners, they're out there chasing perfection, trying to guess the future, and they get obsessed with their win rate. Professionals, on the other hand, do the exact opposite. They're not guessing, they're playing the odds. They observe patterns that repeat, and they know that managing their risk is way more important than being right on any single trade.
And hey, if you don't believe me, look at a legend like Jesse Livermore. He was one of the greatest traders ever, and his win rate was only around 30%. Think about that. He was wrong 70% of the time. If having a high win rate was all that mattered, he would have been a total failure. But he became a legend because when he won, those wins were huge compared to his small, controlled losses.
Okay, so if the pros aren't predicting, then what in the world are they doing? Well, they're observing. They understand the real secret engine that drives the market, and that engine is people. Now, there's a fancy-sounding term for this, behavioral finance. But don't let the name intimidate you, it's actually incredibly simple. All it really means is watching how people, real humans, behave in the market, noticing the patterns they create over and over again, and then building a trading plan around those observations. And here's the real light bulb moment. Markets aren't just squiggly lines on a screen. They're the combined actions of millions of people. And human psychology, that's the one thing that really hasn't changed, not in thousands of years. We're still driven by the same basic emotions our ancestors were. You know what I'm talking about. Greed, fear, FOMO, that fear of missing out. These emotions are literally hardwired into our DNA. And when you have millions of traders all acting on those feelings at once, their behavior creates predictable, repeatable patterns on the chart. So your job isn't to guess the future, it's to learn how to read the emotional story the chart is telling you right now. All right, enough theory. Let's make this practical. How do you actually go out and spot one of these patterns in the wild? Let's walk through a super simple example, step by step. It all starts with a simple 3-step framework. First, you pick a consistent time of day to watch the market, ideally when there's a lot of action. Second, you look for a really simple, basic behavior that happens over and over. And third, you just set some basic rules for what you're seeing. See? The goal here isn't flawless prediction. It's just systematic observation. So let's do it. Let's take that exact framework and apply it to a gold chart. We'll look at the action right around the New York market open and see if we can spot this simple break and retest pattern. Now, just finding something that looks like a pattern is just step one. It's only an observation. The real work, well, that begins when you start to actually test that observation to see if it holds up. So we looked at 5 random days. What do we find? Well, day 1, our rules triggered a trade, and it was a loss. Day 2, we got a signal, and it was a win. Nice. Day 3, nothing matched our rules, so no trade. Day 4, another loss. And day 5, again, no signal. And this is what real testing looks like. It's messy. It's not a perfect streak of wins. So out of the trades our simple rules allowed us to take, the win rate was about 50%. Now, if you're a beginner, that might sound, well, pretty bad, right? It's basically a coin flip. And that leads us to the most important question in all of trading. Can you actually make money winning only half of the time? The answer is a massive yes, absolutely. If for every single dollar you risk, you're aiming to make $2 back, a 50% win rate can be incredibly profitable over the long run. It's simple math. Your wins are just twice as big as your losses, and that gives you a real mathematical edge. And this brings us to a really critical distinction. What we just found was a pattern. It's a simple observation about the market. That is not the same thing as a strategy. A strategy is a complete battle plan. It has strict, non-negotiable rules for everything. Your exact entry point, how much you're risking, how big your position is, everything. And this right here, this is where the real work of a professional trader comes in.
It's not about finding some magic pattern. It's about the disciplined, kind of boring process of refining that simple observation into a personal, proven edge. Pros take that simple pattern and they backtest it 100 times, maybe more. They gather all the data, and they might find something interesting, like, this pattern seems to lose money every single Monday. So what do? They refine their rules. They add a filter. Rule number 4, do not trade on Mondays. Then they test it all over again. It's this data-driven process that builds a truly reliable strategy and the confidence to actually follow it.
So, if you take just one thing away from all of this, let it be this. Professionals are not in the business of prediction. They are in the business of execution. They find a small edge that's based on human behavior, they build a rock-solid, rule-based plan around it, and then they follow that plan with unwavering discipline. That is how they truly read the charts. It's not about seeing the future, it's about executing a proven plan based on what's happening right now.